Thank you all very much for joining us at Tax Talk Live. This month's topic, we're going to bring on Frank Tuminello, and he is with File Forms. There is an S on the end. So if you're looking him up on the web and you're looking up their company, don't forget the S. And they're going to talk. They did a wonderful presentation webinar for us on this topic earlier. They've been following the law and getting set up to support accountants and lawyers, I presume, on this topic, and really more their clients and your clients. So I'm not going to talk very much, but I am going to turn it over to Frank and thank him very much for joining us and invite him to share a little bit about, if you can give us a warm up for those people who didn't attend the webinar, talk a little bit about yourself and how people like Deborah, we were just speaking, for those of you who didn't hear, we were just speaking with Deborah. Now, Deborah doesn't want to do it herself because she's not legally required to, but she may want to refer people. And I think you and your group are willing to pick up those people and create a partnership with that. So,
Exactly.
Frank, I have talked way too long. Thank you for joining us, and please give us your insights.
Awesome. Well, thank you for everyone for joining, and Josh, thanks for that intro. This is obviously, I think, a topic that's becoming top of mind given the nature of the deadlines being right around the corner, and certainly want to answer questions as folks kind of get into the thick of filing season on BOI. I think a lot of folks were looking to get through their core competency, which is tax filings and those extensions. So feels like now there's kind of like the perfect stretch prior to Thanksgiving to kind of get these filings out of the way. And ultimately, we're here to help answer questions and provide technology solutions and different structures that really have catered to a whole host of accountants and CPAs and other legal professionals over the course of our company's 2-year history. So just a quick background on myself and ultimately File Forms. I come from a background in the financial services space. I've been working in financial services for the last decade, the entirety of my career. Initially, I started in the investment banking space, advising banks through strategic acquisitions and capital raises, and then really spent the lion's share of my career investing in financial services businesses at a middle market private equity firm based in Boston. So really got to learn the playbook of what makes a great financial services company. And when this law passed, I viewed it as a huge opportunity to kind of take those skills and build a platform that ultimately would serve financial professionals and ultimately their underlying SMB clients. So we started our business over 2 years ago. We are based in South Florida, Fort Lauderdale specifically. The team of about 15 folks spread throughout the United States. A lot of folks in kind of the East Coast, but also have some on the West. But yeah, effectively, we built this platform to serve all of those on this call and have a few unique structures that can really make this easy so that your clients can avoid the significant fines of $591 per day and really just get back to work, because this is just another one of those compliance requirements that does take some time. It does have some complexity. It's obviously new. Not a lot of folks know FinCEN and have never had to report to FinCEN before. Obviously, everyone knows the IRS, but want to use this time as productively as possible to answer questions about the law or any kind of concerns about helping clients file efficiently. So that's my quick background and the background on File Forms.
Thank you, Frank. Frank, if can you give us a little, for those who may not have engaged too much with the IRS specifically and FinCEN, can you talk a little bit about the differences, the nuanced differences between the two, and why they kind of represent two almost separate creatures?
Yeah, of course. So, the US Treasury is typically in charge of handling, all kind of money related, issues or topics within the US government. And there's multiple different departments of the US Treasury, and one of those is the IRS, and others Financial Crimes Enforcement Network, or FinCEN, which is their acronym. So obviously, individuals and businesses have reported to the IRS for many, many years, as probably as long as anyone on this call can remember. And FinCEN is a relatively newer organization, actually formed in the late 90s. really to kind of help police the financial system a little bit more diligently and kind of wholeheartedly than say the IRS is. So initially FinCEN's scope was really around financial institutions. Then it expanded to real estate professionals and transactions. But now, really given the prevalence of financial crime throughout the United States and how money laundering has been a huge drag on our GDP, FinCEN is now enforcing the Corporate Transparency Act that passed to effectively help prevent bad actors from using anonymous shell companies nefariously and to avoid taxes and fund illicit activities. So FinCEN's kind of scope or jurisdiction has expanded now to incorporate what we believe to be about 40 million reporting companies that will need to file by the end of the year. FinCEN estimates it's probably 32.6 according to them, but we kind of unpacked their methodology and realized it was a little conservative. So that's who FinCEN is, a little different than the IRS, but ultimately FinCEN with this law of the Corporate Transparency Act is looking to build a database of all the private companies that exist in the United States and then use that database to determine who's filed, who hasn't. Those who haven't are going to be fined, and ultimately those who are criminals are going to be prosecuted. So this is a pretty serious new law. It's definitely broad-reaching. I would say 97% of all companies throughout the United States will need to comply with this law. There are a few exceptions for businesses that are already in highly regulated industries or perhaps of a certain threshold of size and employees. But generally speaking, most companies will need to file a BOI report by the end of the year, which is obviously right around the corner. That being said, the government's done very little to actually bring awareness to this law. So I'm sure many folks on this call have heard about the Corporate Transparency Act, obviously having joined this event. But most businesses that we've been speaking to or others really have yet to hear about this law and are very surprised when they do hear about it, because they ask me all the time, Frank, how was I supposed to find this out if it wasn't from you? And I'm like, well, you would think the government would kind of bring more awareness, but I just don't think it's their forte. So they've said that they're going to increase the marketing and awareness efforts, but hasn't reached my doorstep or TV just yet. So we're trying to do our best to fill the void in kind of knowledge around this topic, and obviously providing solutions to help make it easy. We have a direct integration to the federal government to actually get the information to the government securely and efficiently, which is very value-add feature for those that choose to file with us.
Great. I've got another high-level generic question before we start getting into the good stuff. So my parents own a self-storage business, and I want to explain to them why their accountant's asking them for a BOI report, and they have no idea what a BOI. They're like, "Well, isn't boy spelled BOY? Why do I only have 3 boys. Which one do they want?" So if I'm trying to give an elevator pitch to my parents about their business, how do I explain what this is?
Yeah, I would say there's a new federal reporting requirement that is requiring all beneficial owners or controlling decision makers of private companies throughout our nation to report to the federal government in an effort to prevent money laundering and financial crimes. That's kind of a mouthful.
That's brilliant.
But that is probably the most concise manner of addressing why this exists and what needs to be done.
Great. So tell me a little bit about file forms. How do we actually use you, and how would you help our folks here on the call?
Yeah, so my business partner and I, as I mentioned, I come from a financial services background. He's actually a former practitioner at Alvarez and Marsal. He was the head of their global tax and compliance group, and he really had firsthand understanding of how terrible government portals can be to file compliance forms on. He said there's no scalability, there's no features, there's no ability to make invites or secure information and aggregate it. So I think everyone has probably dealt with that in some capacity. Calling the IRS, for example, huge hassle. And you just can't really get the answers you're looking for. So addressing this pain point was a significant focal point for us, in addition to the fact of how many companies were going to need to file this report. 40 million businesses. That's a ton. So we knew there was going to be a lack of features to do this efficiently. We knew that accountants were going to get asked about this, and lawyers were going to get asked about this, and we knew the government was going to drop the ball on technology. So anticipating all of those things, we wanted to build a platform that could really help address those issues head on, and make it easy for businesses who are, say, do-it-yourselfers, to do it easily with guidance. Obviously, this is new. There are some complexities. There's a lot of sensitive information that's required on the form. So we knew cybersecurity and just confidentiality of information was going to be extremely important. So we built encrypted technology to aggregate data. We're SOC 2 compliant so that all the information that's disclosed in our platform is kept securely. And then ultimately, we built a direct integration with the federal government so that this information can securely get pushed to the government in an instant, and then provide confirmation and transcripts to the users so that they have a central repository to store this information. Because a lot of folks are used to annual filings, and a lot of folks are used to one and done filings. This report of BOI is a little bit different. It's a little bit different because this is a perpetual data monitoring requirement, which is a huge hassle because you can't really create good process around it. You're going to have all these companies that are having changes of information that ultimately need to report those changes, any change on the initial filing, which includes IDs and names and ownership and addresses and all this other information. Any change that happens, which is inevitable in life, that needs to be re-reported within 30 days to the government. Otherwise, that business, the reporting company, is going to be susceptible to fines of $591 a day, which is significant, especially if you have multiple entities. So, anticipating all of these pain points is how we built our product. And our product actually monitors the data so that you can stay on top of these changes so that you don't get blindsided when you're moving your home or moving your business or bringing in a new owner or getting married or, God forbid, someone passing away. So we really tried to do all we could and continue to develop and take feedback from our clients to really alleviate this pain point so that folks can avoid the fines, get back to running their company, and not have to be hung up with state and federal compliance. So we have a bunch of different models to help serve CPAs because we anticipate, because the government isn't providing enough education and isn't providing enough awareness, folks are going to hear about this somehow, and they're going to turn to their CPA and hopefully not point the finger, but hopefully just kind of ask for help or guidance as to whether or not this needs to be done. And when that happens, we want you to be prepared. We want you to be prepared with educational content to answer their questions efficiently. For example, we provide client letters to our CPA partners. We provide email templates with education in them. And then we provide the filing solutions themselves so you can kind of distribute the education and offer kind of a few clicks to file type of experience without having to bog down your team, your firm, or answer any questions that you're not comfortable answering. So we do have a referral model that is a great option and really allows you to be hands-off while making a rev share on all the filings that we process. And then we also have a workflow solution if you want to be more hands-on. Say you kind of provide a more white glove service at your firm. We have a workflow solution that your employees can sign into. You can easily upload your client information from your tax prep software solution or your internal database. And then from there, you can either push the filing to FinCEN through our software on behalf of your clients, or you could actually invite your clients to that account of that business and have them ultimately send the information using our platform to FinCEN. So I think as you think about BOI and how you want to approach it, you should think about liability and how much you want to be involved versus not. Some folks are comfortable. Some folks don't want to jump into a new filing requirement because they just don't have the capacity or don't have the interest. So we really try to provide a wholesome kind of comprehensive approach to any of the filing needs that exist.
Awesome. Thank you, Frank. So let me take a moment and just, again, for those of you who are new to this Tax Talk Live option, please mute yourself if you do not have a question. If you do have a question, please unmute yourself and feel free to ask the question at a pause point. I have a bunch of questions in the chat, and it would be wonderful if you can put your question into the chat, because then I can bring it up afterwards and ask Frank directly without interrupting the flow of what's going on. That would be fantastic. And we will do a follow-up on everything that's talked about. Not only will we have the recording available, we'll also go do some additional research. File Forums has been a great partner for us. They're a new partner. We're just engaging with them now. I really appreciate Frank taking this time. Frank, I'm going to start digging into some of the questions and comments we're getting in the chat. Some of them are public to everyone. Some of them have been direct to me. So I'm going to ask a few questions from there, and then we'll continue on with some of the other discussion. Is that all right?
Perfect.
Fantastic. So Pamela was kind enough to say that she did her BOI report. She has not mailed out her client letters yet. And you mentioned that you had a template client letter. I love that. She also mentions in here, though, that keep in mind the photo ID must be JPEG, not a PDF. Can you talk a little bit about that? And really what I'd like you to kind of talk about is, what are the little persnickety detail things that you've noticed that are catching people because they're just little, they're like, well, why can't it be a PDF or GIF or whatever? Does that make sense?
Yeah, yeah, definitely. So there are some kind of quirky little snagging points in the filing process on the FinCEN portal. We really in our platform really tried to anticipate that and making it as streamlined as possible. That being said, I think that's a great point. JPEG versus PDF on the image. Also, image size. I think it can only do 4 or 5 megs. So if you have images that are too detailed or too high res, that the system won't accept it. You need an EIN. A lot of folks don't have an EIN. You can go on the IRS website and get an EIN for free. Our team can help you get it as well. So EIN is something that is top of mind in this
Frank,
filing.
I'm
Sure.
sorry to interrupt you. Does a PTIN count against instead of an EIN? Can
You can use a foreign tax identification number. Yeah.
Okay.
Yep. You can also use a social security number if you truly can't get an EIN. FinCEN has a high preference for EINs, but
Yep.
they will accept a social. Let me try to think of other tricky components.
Well, let that gel in the background. I'm going to ask you
Okay.
a question. And
Cool.
but if you come up with other tricks and things that are
Sure.
feel free to throw those out. So Grace was kind enough to mention that she spoke with an attorney recently who said it's currently under litigation and may not be required. Deborah also mentioned that in Tennessee it's not required. How do we know whether we need it or not?
So just to clarify, it is required. It might not be required for CPAs per se to do the work, but ultimately, folks do need to file this. The government's been very clear about that. Some CPAs may opt not to file on behalf of their clients because they have concern over UPL or unauthorized practice of law. That makes sense. We can be a great outsource provider for those who are looking to not kind of tiptoe the line of UPL. I certainly don't advise anyone to do that because obviously there's ramifications for doing so. That being said, you make a great point that there have been some court cases challenging the constitutionality of the Corporate Transparency Act. However, we've been following those cases extremely closely, and at this point in the year, you're unfortunately not going to see this law get repealed. In order to get repealed, in fact, it would have to get elevated to the Supreme Court, which at this point it hasn't even come close to that just yet. And you're really starting to see at the circuit court and district court level, judges starting to deny plaintiffs' cases being brought forward. So most recently, you saw that in Virginia. Weeks before that, you saw it in Oregon, where basically the judges are saying, "Hey, this case has no merit. These are not factual based concerns, and we're denying this injunction outright." So those are kind of the recent updates. Also, the first court case that actually had some legs was in the Northern District Court of Alabama, which ultimately reached the 11th Circuit Court after being appealed by the DOJ. And when those oral arguments in the 11th Circuit were heard, the judge outright said that the plaintiff's case was far-reaching. So we'll continue to monitor it. There's other cases that are kind of at lower level courts that are kind of doing their best to work it forward. But at this point, the guidance from the DOJ is to get compliant and file.
Awesome. And I'd like to pick up on something you mentioned in there. You talked a little bit about the unlicensed practice of law, UPL. And can you, just in case anybody, I'm sure everybody on this call knows what that is, but can you explain it and why it might be a problem for a CPA or especially an EA or a non-CPA practitioner?
Yeah, certainly. Effectively, if you're not licensed to practice law, you shouldn't be providing legal services or legal consultations. That's kind of the crux of it, to be honest. But at the end of the day, a lot of states have actually said that filing BOI reports is not considered UPL, and unless it's a highly complex ownership structure that does require some legal kind of determination. But ultimately, most reports can be handled by CPAs, given the ownership structures tend to not be as complicated.
Great. Kemi, will you please make a note that when we do our follow-up with this, that we provide a website that shows which states are in which position on the on this topic? Thank
Got
you.
it.
Thank you very much. And so now my next question, Frank, I'm going to pivot a little bit. Kimara, and I hope I'm pronouncing that right, asked, what about nonprofits?
Yeah, so most nonprofits are exempt. So tax exempt entities as well, are also deemed exempt. And the reason for that is because they're already checking a bunch of boxes to kind of get that tax exemption. So the government has clarity as to who owns and kind of has controlling interests in those businesses.
Great. And Pamela, I'm going to pivot again. Pamela asked, we were told to wait until October to file in case it wasn't going to be required, but FinCEN is adamant that they will require it. So she's just telling her people to go ahead and file it. Is that a good strategy?
Yeah, I think a lot of people did wait towards the end of the year to file because, if there was a change, then they would have to refile, and, who wants to file multiple times if you don't have to. So I think there's, definitely strategic insights there towards when the best time to file. But at the end of the day, there's only 56 days until the end of the year. We got a bunch of holidays between now and then. So like I said, you probably want to get this out of the way prior to Thanksgiving.
So now we get to delve into some of the fun questions. What's your advice for a company required to register, but one partner has disappeared and will not reply to requests for the ID? Thank you, Terry, for putting that forward.
Yeah, we've heard of this situation before, and starting to see operating agreements drafted by attorneys to require this level of reporting as kind of part of being affiliated with kind of management level of a business. But ultimately, you need to file best efforts, accurate and complete information willfully, and then ultimately you can send a letter to FinCEN alongside your report after you get your transcript to say, hey, we did our best. We do have one beneficial owner dragging their feet. We don't want the company to be at stake, but this is kind of the person who you need to follow up with to get them to file. So, the government has been pretty lenient so far on not fining folks yet. And they've done their best to answer all the questions like that one, which is a tricky one. But yeah, we're starting to see in deal docs new companies that are being formed that beneficial owners, it's part of their obligation as being a beneficial owner to disclose information and keep compliant with the CTA when needed.
And I presume it's a good idea for whoever's doing that report to, or not the report, but whoever's trying to track that person down to keep records of how often, when, and in what format they tried to reach out and do their due diligence.
Yeah, I mean, if you have an email from the individual that says, no, I'm not giving you my information, and you share that with FinCEN, I would suspect all the other beneficial owners in the company is safe, and it's really now that one person who's liable.
Great. And I've got one from Hyman. Does FinCEN really believe that someone who has gone to great lengths to hide their ownership in a company is now going to reveal that information? What's your thought on that?
I mean, I hear this concern all the time, and folks saying, "Oh, $591 a day isn't much if you're laundering millions of dollars worth of dollars." I mean, it's a great point, and obviously laws aren't perfect, and they have intent, and it's not always practical. So, uh, you don't want to hear any more of my subjective commentary. I'd prefer to keep these responses more objective.
Got it. Tennessee recognizes it as a legal function. Accountants are not allowed to practice law. Thank you, Deborah, for correcting me. I appreciate that. I misspoke earlier. Hyman also asked if it's unconstitutional in one Alabama case, then will that cause it to be unconstitutional everywhere else?
No, the DOJ was very upfront in their statements post appeal that everyone else needs to file. The circuit court, the appellate court, that said the plaintiff's case was far reaching because it was based off of summary judgment, non-factual based evidence. Effectively that case will likely go back down to the district for a more factual based determination. And then from there, it would have to go back up to the 11th Circuit and then make its way to the Supreme Court. So, I mean, the quickest the Supreme Court would hear that case would be October 2025, which at that point we're obviously well past the year-end deadline of January 1st, 2025. So, I would say it's definitely a stretch that case ends up leading to this whole thing getting repealed, specifically off of the commentary of the oral arguments that were heard about 5 weeks ago.
Nice.
Josh, can I just jump in for a second now?
Please do, Hyman.
To clarify my question, because I thank you, Frank, for the answer, but what I'm really asking, and I guess it's more of a legal question, is if it's unconstitutional, according to a judge in Alabama, how is it not unconstitutional for everybody? I mean, it seems to me if something's unconstitutional, either it is or it isn't.
Well, it's not. That's the thing. It's not unconstitutional. That was just one judge's opinion.
Well, but all I'm saying is if the judge rendered that opinion, I guess what I'm confused about, and again, I'm not an attorney, is that it's unconstitutional. I mean, basically the ruling said it's unconstitutional, but only with regard to the people who were involved in that case. I mean, how can that be? Either it's unconstitutional or it's not.
Yeah, I mean, basically until that court case proves that it's unconstitutional, it is constitutional. And that's the way of thinking about it. So despite the fact that the judge did rule it to be unconstitutional, that does not take federal precedent. That's just within that case. So the plaintiff group who brought that case forward, they get, call it an exemption from reporting until the case runs its course. However, everyone else needs to report because effectively it is constitutional. It's a law. It's an active law where we stand today. So challenging the law, obviously you need to prove that with facts. You don't just get to convince one judge at the district court level and then all of a sudden nationally it's unconstitutional. That's not how our system works.
Right. And it'll probably end up heading out to either the DOJ or FinCEN itself will pursue it up to the Supreme Court, which is where it'll be determined constitutional or not. So good. Hyman, did that clarify I know
well,
it
it clarifies it. It's just, I guess, maybe just because I'm not an attorney, it just doesn't make any sense to me. I just don't see how you can say that it's unconstitutional, but only with regard to those 5 people.
Good. Well, we're not going to settle that one here.
Yeah, I don't think so. No.
But did you have anything else? Because I always appreciate your questions, comments, and concerns.
Not on that. I just want to back up a little bit though, because on the other question that I had asked about whether FinCEN is really thinks that people are going to reveal this information, it just kind of seems to me that what they're really doing is they're basically they want to charge somebody if they find this criminal. the other guy who's laundering money or whatever. They just want to be able to charge them with as many things as they possibly can, so that even if they lose, they charge them with 28 crimes and they can't get them a criminal conviction, they can at least get the $591 a day out of it.
Got it.
Yes. Effectively, FinCEN told me directly that they're using this as a way of prosecuting people
Mhm.
quicker than they'll be able to prosecute them for other crimes that perhaps haven't been proven yet, or haven't been, validated yet. So I suspect FinCEN has a list of financial criminals that they have a hunch that are doing, nefarious activities. And when those people do not disclose their BOI reports on time, then they're probably going to let the clock accrue for a couple weeks and then ultimately go to
And that
them
was kind of
and
what I figured.
prosecute them.
Because if nothing else, the 591 is a civil matter, which is going to require a much lower degree of proof, obviously, on behalf
Sure.
by FinCEN. So ultimately, like I say, if I form a partnership under a trust, under a corporation, under a partnership, under another trust, under another corporation, I'm trying to hide myself. I'm sure I'm not going to go now. Oh yeah, here I am.
I agree.
Yeah.
So relevant, I think, to that point, what happens? Terry brought this up. I'm gonna massage her question, Terry's question a bit. What about companies that closed during 2024, or if they file bankruptcy on this point? Does that inure them from prosecution, from the fees?
So basically, you would have had to dissolve that business and be fully dissolved prior to 2024. And the reason for that is FinCEN wanted to prevent people from spinning up shell companies, laundering money quickly, and then winding it down extremely quick. So basically, if your business was active at any point in 2024, you do have to file a BOI report. And if you've already dissolved it in 2024, you should disclose the ownership information before you had dissolved it. So understanding that now there's no beneficial owners because the business doesn't exist anymore, still have to file that report for when it was active effectively with those beneficial owners. If a business was truly inactive prior to 2024 with I think 6 specific characteristics, which I can follow up on, then that includes like no transactions of over $1,000 in the last 12-month period, no change of ownership, et cetera. Then that business is deemed purely inactive and would not need to file. But it is pretty hard to dissolve an entity. I think a lot of folks probably have dormant entities that aren't properly dissolved, so those entities effectively would likely need to still file a BOI report. So it's also kind of good housekeeping going forward to dissolve entities, get the BOI report done as you kind of form them and dissolve them, and then not have these entities just existing and active any longer because then they're so susceptible to BOI reporting going forward.
Thank you, Frank. I'm going to tell you what I heard you say, which may not have actually been the words that came out of your mouth. What I heard you say was that if my company was active in any way during 2024, I need to file.
Yes.
Got it. My next question is from Krista. What is your recommendation if the client did not print anything when they filed their BOI report? Should they resubmit so they can print something that says they did it?
You should have received a transcript emailed to you from FinCEN, and I mean, there's no need to print it per se, but you could definitely keep it handy. Also, if you go to file again, if you check the box for initial report, it will tell you whether you filed or not. So one of the benefits of our technology is that it stores your FinCEN transcript in the platform so that you don't have to worry about storing it on your own or wondering where it is. It's kind of all your BOI data and all your transcripts are right there to make it easy for your clients, for you, for your employees.
Nice. Thank you. I've got a couple. You mentioned that tax exempt groups and nonprofits do not have to submit. I got a couple of different other categories here. How about sole proprietors? Anything special about them?
Yeah, so sole proprietors, in fact, they don't typically form a legal entity at the Secretary of State level, which is kind of the initial kind of screen or parameter of who needs to report and who's not. So reporting companies, they must be companies that are reporting and forming at the Secretary of State level. So a lot of sole props do not do that. A lot of folks have a registered trade name, but not necessarily a legal entity formed at the Secretary of State level. So if you're not forming a legal entity at the Secretary of State level, for example, sole props, they don't do that. They don't need to file.
Excellent. How about trusts?
Trust, kind of along those lines. Some trusts, I think there's 8 states that trusts actually do need to file at the Secretary of State level. So those trusts will need to, in fact, file a BOI report. Now, all those other states, the lion's share of trusts will not need to file at the trust level. However, a trust does kind of offer a connection of beneficial owners to underlying assets. And those underlying assets a lot of times are held in legal entities. So the trust offers the beneficial owner kind of conduit to all those other assets. And as such, the beneficial owners of the trust or the beneficial owners of the underlying assets will need to disclose in accordance with the Secretary of State disclosure and formation, and then ultimately FinCEN's definitions of a reporting company and beneficial ownership.
Thank you. And along the lines with the trusts, if the trust is filing its own tax return annually, does that change your answer in any way?
Nope, it all comes down to whether the trust is registered with the Secretary of State. If not, does not need to file.
Perfect. Thank you. And thank you, Kimara and Robert, for those questions. Pamela asked, have any penalty letters been issued that you're aware of yet?
Not for BOI, no. FinCEN has thus far been very forgiving, and I suspect, given that only 6 million or so forms have been filed so far out of 40 million that will need to be filed, which is right about 15%. Me and some colleagues like joking around. I don't think FinCEN's building any jails because effectively, if they were going to fine everyone, there'd be a lot of people in a tough spot. So I suspect that that most folks will look to get compliant, and if they don't, there'll probably be some forgiveness early next year. But thus far, there haven't been any BOI fines yet. That being said, FinCEN has been putting out some huge fines regarding this Bank Secrecy Act. They fined TD Bank about 3 weeks ago for about $3 billion. And then shortly thereafter, another quasi-billion-dollar fine to another financial institution. So FinCEN's kind of proving that they're not afraid to fine people big numbers, but thus far not for BOI.
Nice. And I'm going to bring up another type, homeowners associations. Are they exempt? And if not, who are their beneficial owners?
Yeah, FinCEN definitively says that homeowners associations do need to file, and effectively their beneficial owners will typically be the board, because a beneficial owner, there's 2 types. There's folks that can be a beneficial owner if you own 25% or more in the legal entity. So that's pretty binary, just an ownership threshold. I think we all like numbers on this call, so that one's easy. And that really doesn't apply to homeowners associations because typically there's a bunch of different, more than 4 owners in that. So, but the other definition of beneficial ownership is exercising substantial control or key decision-making capabilities over the legal entity. So that's a senior officer, a director, a board, et cetera. That would apply in the context of owners associations. And, like I said, the members of the board or the controlling members of the board would be deemed the beneficial owners.
Great. I've got a question from Krista here. Fictitious partnership names in North Dakota general partnerships do not have to file an annual report with the Secretary of State or create a general partnership. However, they do have to file a fictitious partnership name every 5 years. Is this treated the same as a trade name registration for a sole proprietorship that is not required to file for FinCEN, or should the general partnership file just to be safe? And you may not know the answer to that. I get that.
Well, the thing is once again, there's states like Texas where general partnerships do need to register with the Secretary of States, and then other states they don't require general partnerships or other partnerships for that matter to file a formation or registry document with the Secretary of State. So once again, if you're not filing that document with the Secretary of State, which in the context of this does not sound like the case, I think you're free and clear. But if you do file a registry document or a formation document with the Secretary of State, then you more than likely will need to file. That being said, there's no penalty for over disclosure. So if you're on the fence or not sure or you can't get a straight answer from FinCEN, and granted, there's a lot of open-ended components to this. So there's certainly some gray areas. The best is just to file and get compliant because there won't be a penalty for that. And that applies to kind of that substantial control beneficial owner scenario that's a little less binary, right? Like people are saying, oh, my secretary, pays payroll through our bank accounts and has, key decision-making power over that. Is she going to, or he going to be a beneficial owner because of substantial control? I'm like, well, that's kind of your decision as to, is that true substantial control of the business or just a bank account? Kind of up to the business. I can't relate to every single business situation per se, but once again, there's no penalty for over disclosure.
Good. I'm going to do a hard left here because a couple of people have asked, what's the cost of working with you to file these forms?
Yeah, of course. So we have a Pro FileForms Pro Enterprise solution, which is kind of the premier product if you're looking for something that's going to help you store all this information and invite clients to upload their IDs securely and ultimately file on behalf of the client or have clients file after you kind of get them started. If you're interested in that model, which is kind of more your firm owning this process for clients, that model starts at $100 or I'm sorry, 100 filings for $75 a filing, and those filings never expire, so you can kind of use them at your discretion, and then you can go charge what you feel comfortable is a comfortable rate, and really helps you kind of create a nice revenue stream. Typically, we see folks get paid back on their investment within 15 filings or so, and then from there it's just all profit. So that's a great opportunity for folks looking to turn BOI into a new revenue stream and kind of a new service alongside the other services that you provide. Then there's our revenue or our revenue share model or referral partner structure. So with that, we provide you a co-branded landing page and a unique link to that landing page. That link can easily be embedded into your email outreach, your client letters, can be embedded on your website if you'd like, put it on your LinkedIn. However you engage with clients. And that link will effectively walk them into the FileForms experience, which is a do-it-yourself kind of disclosure, where our team is on standby via chat or by phone to help walk them through to the extent needed the filing experience, which only takes about 10 minutes. It's very quick. And quite frankly, we don't get a lot of questions because I think the technology has been built to be kind of very intuitive and a lot of education built into it. So in that model, upon reaching the point of paying and submitting to FinCEN, the client will be presented with two options. They'll have a single filing option, which we charge $179. That's $179 per entity, and that's a single submission to FinCEN. Now, the information is still stored on FileForms. So say if the business comes back in 5 years and their address changed or they got married and their name changed or something like that, then they can easily go make the change. There will be an additional fee, but the information's stored. You can make that single change and kind of get on with it in very short order. Now, if you have businesses that are going to be anticipating changes, a lot of startups out there these days that are, constantly growing their teams or changing locations because of growth or raising capital because they're growing and new investors are coming in. We also, in addition to that $179 single filing subscription, we also have a $199 annual subscription, which comes with unlimited changes of information. So you got the $179 single submission, And then you have the unlimited filing subscription for $199. So it's a little more expensive, but you get a lot more features. And those features include unlimited change of information throughout the year. So if you're doing even just two or even just one change of information after the initial filing, you're going to get much better value in that subscription construct. And then furthermore, you get the notifications. So we're actually monitoring the data so that you're getting reminders of any changes that could take place. If the ID expires, for example, we'll send you a notification to upload that and update it. So that a little more features on that one. And then, as I said, it's a rev share. So depending on which the client chooses, you'll get 20% of each transaction, and we pay that out every 30 days to our partners, and we provide a partner portal for tracking all of that. So it's very hands off. You're outsourcing BOI, but still, providing a great resource for your clients, our team, to support the tricky questions, and then ultimately passive income stream for you all. So hopefully that's kind of a helpful context. We also provide registered agent services and other state and federal compliance. So once you disclose BOI information, you're really able to file a lot of other state compliance forms, which, typically is a hassle every point in the year, just kind of getting this stuff out of the way. I know I've missed my annual report before in the state of Florida. It's a $500 fine. It's not fun. So we really help folks stay out ahead of those things.
Thank you, Frank. And for those of you who are scribbling madly down all this information, we'll follow up with the details in an email alongside the link to the recording and also the additional follow-up report that we normally do here. All right, I'm going to flip back to types of corporations and entities and whether they are valid or not. What about sole proprietors that are single member LLCs? I know you said at the Secretary of State level. Is that?
Yeah, single member LLCs do need to file. So that is a document, or that is an entity that's formed at the Secretary of State, and they do need to file.
Thank you, Deborah. And John asked, why is the photo required? Is it BOI or something else? Can it be a high school graduation photo? Can it be, does it have to be something more current? Like it's I
It's a
think
government issued ID, passport, driver's license, passport card, tribal documentation, things of that nature. Can't be a high school photo, unfortunately. But yeah. Why is it required? I think, it's why is any of this required? It's the law. They need an ability to validate that the person's actually real. They're filed with the government, from the stance of identification purposes, and kind of triaging kind of the relationship between that person, them being real, the company being real. And we actually have some really cool KYB, KYC, if those acronyms mean anything to anyone on this call, but we have some cool features around that too for biometric screening, where you can take a selfie and confirm the ID matches it. So a lot of folks don't need that much, but some law firms really do like that kind of more diligent, comprehensive approach.
And is the picture new? I've got a couple people who have asked if that's new because they didn't notice it before.
No, that's been the case since the get-go. That as
Great.
part of the final rule, which was written before this law went into effect, that was contemplated and put into law. So.
And John also asked for a little clarification. Did he understand it right that you can take the information from a tax return and generate the BOI?
So basically the typical kind of approach that we've seen is folks are able to export information from their tax prep software solution into our template. We provide a template that's an Excel, and then you can copy and paste, say, company legal name, EINs, addresses, beneficial owner information into that template that we provide. And then you're able to just drag and drop that Excel document into our portal directly, and it will pre-populate a full dashboard of all the companies. And then from there, you can just kind of click through the tasks and submit.
Excellent.
It's very streamlined.
And Rebecca asked, I think this is about your referral program. Can she refer her clients to work directly with you? And
yeah.
Okay.
100%. I mean, you could, if you don't want the referral link and the revenue share, which a lot of folks just, don't feel the need to collect that, or don't need to, you can just refer folks to fileforms.com, and please do reach out to our team, because we're still happy to provide you a client letter and email template to get the word out. And then instead of embedding the unique link to track commissions, we can just give you our website, which is www.fileforms.com. And then if you do know other accountants or other kind of lawyers or anyone else, you can actually, kind of be a parent referral of child refers. So it's kind of like a two-tiered referral structure. So we have some groups such as Tax Rep Network, for example. They represent like 6,000 CPAs. They're the parent referrer of child refers.
Got it. Got it. I've got a question here. They've got two HOAs, homeowners associations, but they're listed as nonprofits. You mentioned that HOAs were explicitly called out. Does that have an influence on it, whether they're
Yeah.
nonprofit?
So yeah, if they're like a 501(c), for example, or a registered tax exempt entity, then more than likely they will not need to file. However, a lot of HOAs aren't, so just keep that in mind.
Great. And if I want to partner with you and take advantage of your work now, it's November. How quickly can we get things up and running so that my clients are not in trouble?
We can get it up and running by the end of this call, actually. It's
Oh,
very quick.
okay.
So you're able to sign up quickly. You'll get a welcome email in the matter of 10 minutes. There's the link in the chat to sign up. Effectively, you'll get the unique link. You'll be invited to one of our onboarding sessions that happens weekly. It's live Q&A. We'll show you how to distribute your links. We share best practices of what works well. We're working with over 7,000 professionals, mostly CPAs, in fact. So we've kind of pressure tested this process, and certainly have a good playbook to offer. We have social media collateral, marketing collateral, one-pagers, anything you can think about or need, we're going to provide to you, and it all can be co-branded to instill trust and kind of a true client experience. So would love to help in that process.
Nice. Hiram, I sense a disturbance in the force, which suggests to me that you have a question or a comment. I know you didn't raise your hand, but you always have something good to say as we end our sessions, and we're getting ready to close in on the end.
No, not this time. Frank did a
Excellent.
wonderful job. I've learned everything I needed to know.
Excellent.
Awesome.
Jency, our president, thank you for joining us. Do you have any questions, comments, or closing remarks?
No, not really. Sorry I was late to start with. I'm glad it's recorded so I can catch the part I missed. We had a client that wanted to mess up our time schedule. Just thank everybody for participating. And Frank, thank you for your good information.
Oh, my pleasure.
It's our topic of conversation in our office right now. I'm assuming like everybody else's.
It's a popular topic.
We did get extended to May 1st of 25 for North Carolina, Georgia, South Carolina, and Florida.
And Florida, yep. There was that FinCEN update last week, which honestly we might see that extend to the country. Obviously, folks got hit by storms, and we felt it down here in Fort Lauderdale. Fortunately, we weren't on the West Coast, but nonetheless, those folks did get some relief. It was a little tricky to read that update from FinCEN. It was a little convoluted, but we were able to decipher it for our clients. And there's also a bunch of pre-recorded videos and webinars on our website as well. If you need kind of a full comprehensive walk through the document, what's beneficial owner, reporting company, all that jargon, you can reference the resources section of our website, and there's all those pre-recorded. And we also do a bunch of webinars almost every day, in fact. But we got a couple on our website, top banner. You can sign up for them.
Frank, thank you so much. I really appreciate you taking the time and answering these questions. I know we dug into a couple different areas. I thought this was great.
Okay.
And I also really appreciate you taking the time previously to do the more official webinar style format with us, because I know we got an amazing response to that, and we got a lot of feedback, which is what generated this call. So really, thank you very, very much.
My pleasure. Please do reach out. I just put some contact information in the chat, and would happily answer any questions or set up demos to work with you all. So thank you so much, and hopefully we can be helpful and talk again soon.
Great. And thank you all for joining us. We really appreciate the attendance today and the communication and everybody getting involved. That was really helpful. We will follow up with our normal report that digs into a little bit more information about what we talked about today, as well as a lot of information about file forms and what Frank put forward to you folks as the various levels of partnership and availability of services that they have. Again, thank you all very, very much. And you have a fantastic afternoon.
Thank you so
Thank
much.
you.
Thank you.
Take
Bye.
it easy. Bye.
Thank you. Bye.